What is up, everybody? Welcome back to another YouTube video. Today we're going to be doing a trade recap. So on my Twitter, I had posted, if you guys get me to 1,000 likes, then I will do a recap. So there's like two videos in a week, shit, new year, new me. Honestly, I don't know what the fuck is going on, but yeah, you guys got me 1,000 likes, so here we are. So we're gonna start with my Asia trade that I took here, right? It says January 5th, but it was on January 6th. Technically, it's just Asia session, so that's why it says, I posted before midnight, I believe, so that's why it says that. So let's get into the narrative, right? We're always gonna talk about the narrative from the top down. So everyone asked me, like, how you need a video on narrative. Well, every trade that I, recap is like how it's showing you how to build narrative, essentially, right? We don't pattern trade a model here. We don't just have like an entry model where we just like spam it and stuff like that. No, we frame our trades with narrative. That's what comes first, and then we apply our model. We apply the GxT model to align ourselves with that narrative towards our draw and liquidity, right? So that's what we did here. So if you look, coming into the day, so this is the previous close. As you can see, this 4-hour range here. We take out this range. We have this SMT that was between Tuesday and Wednesday's candle here, looks like, right? We expand away. So that's what we want to see after a true reversal. We expand away. We have a change of state delivery on the 4-hour time frame. And we are creating gaps, right? This is what we want to see. This is the universal sequence. And what are we doing? We're respecting gaps. We're creating SMT and gaps. So if you traded traded Monday, good trade right here. For continuation, right? If you look on gold, there's an SMT fill right there. Boom, boom. Right, so it's very clean. So there's no reason to be bearish here. You're gonna see there's SMT here. There's SMT here technically, and even with this triad. But why do we not care about it? Well, what are all assets doing right now at the lows? They are all reversing. You see they're all expanding away. So that when they're all expanding away, we don't need to see, or we just anticipate this to break, right? So we want to trade this as a lagging asset, and that's how we filter out SMTs, right? Again, that's another big misconception of people. They don't know where to look for SMTs and stuff like that. But we know exactly where to look for them. We know how to filter them and all that, right? So if you look here, what did the previous day do? This is pretty important. Like, what did the previous day do here? So it created a divergence here, but why do we know this is fake? We can even see it here. It's because we created an initial, reversal candle, but we didn't have any follow through. So now this is just viewed as like consolidation or retracement, right? It's just like accumulation. It's not really doing anything. So this is clearly not a valid reversal. So this even adds on to context why we're gonna break this SMT likely, right? So if I drop down to the hourly, what are we creating now? We're creating relevant swings. See the space between these lows here? So we're kind of opening the day in a nice little range where this is a nice little protected range to me. It's very nice. And we're kind of opening the day up in EQ. So this is where an Asia kind of day for expansion would be applicable here, right? You have a draw liquidity very close to the daily open. You have a refined key level potentially here, right? So we play price going forward. You're gonna see what happens, right? So we can either take out this low or have SMT with the low, it doesn't matter. So you're gonna see over here, what does gold do? It takes out the low. So we have a divergence with our relevant swing. So that is obviously a cracking correlation with the relevant swing. And that is kind of like a refined key level, right? When we mark out equilibrium of this previous stage range, if we want to see continuation, we want to see the upper half support expansion because that's what creates that small wick, right? If this wick is formed way down here, has super large wick, doesn't really support expansion. We want to trade expansion candles. So that's our filter and price right there, right? But if you look here, divergent with the previous 4-hour low, but it's also that 6-hour candle, right? It's the previous quarter. If you trade quarterly theory, if you don't trade quarterly theory, kind of disregard this. But if you look at this previous candle here, it is a bearish candle going gold. It's a bullish candle. So now you have a strength switch because this asset, remember, technically has an SMT here. remember, with gold. So gold is technically stronger at this point because it has this divergence like this. It's taking out highs while this asset has not taken out the highs, but now it's creating the failure swing, meaning it's stronger to catch up. And that's what we wait for asset sync. A leading asset failing to reverse, and we want to see the lagging asset switch to stronger asset to catch up. Right? It's very, very simple. It's not complicated. It's a very mechanical process. And if you just look at the 6-hour time frame, you can just see the phases of price here, right? You have expansion, consolidation, small range candle, manipulation, expansion, consolidation, small range candle, inside barring. What is this? SMT with a relevant low. Look at the space between these lows. See this space between these lows? That's what creates a relevant swing. When you manipulate a relevant swing, it creates a protected swing, right? When you manipulate a relevant swing, there's no reason to return back there because there's no failure swings. You've taken out all local liquidity. There's no reason to return. That's kind of the logic. And shout out to AM Trades for that. So we have our 2-stage Kraken correlation. So there's really no reason for anything else. When you have a higher time frame 2-stage Kraken correlation from the high and low day, so like 6-hour, 4-hour, even daily, you don't need to confirm that SMT with like an hourly PSP or 30-minute PSP. You don't need that. If this is not making sense to you, PSP, 2-stage Kraken correlation, you need to go back in my videos. If you don't understand my model, these trader caps are not gonna make sense to you. These trader caps are for people that actually know my model, have been through it all. You need to watch all my videos. If you can't do that, you're never gonna make it, to be honest. Like, it's just the facts. So here, I'm not gonna trade this reversal candle, right? It's just simply the 2-stage Kraken correlation is confirmed by the candle closure, right? When I look inside of this candle, all I'm looking for is like reversal signatures, like V-shaped signature, CSDs and stuff like that, gaps and whatnot. So when we look inside of this reversal candle, do we have those signatures? Yep, V-shaped signature, gap being respected, CSDs. So I can assume that the next candle, let's pull up a indicator right here, right? We even have this hourly CSD, like I said. I expect this next candle to expand, just like we did on a daily. Remember what we did? We marked out equilibrium of it. And I want to see this next candle go open, low, high, close with a small wick, forming the wick in the upper half of the candle's range, right? And I can look for a refined key level. What do I have here? A gap in that refined key level. That's what I enter on, essentially, right? Move my stop loss here. Wherever you put your stop loss, it's all up to you where you put it. I believe I put it here, if I do recall. Pretty sure I put it there, yep. And yeah, because where's my stop loss here? It's around EQ of the previous candle's wick, so we know we don't want to see that return there. And yeah, I take it to this high. Now let's go back to my thing here. So you see, here's our 6-hour 2-stage PSP. That's our 2-stage Kraken correlation. We can actually see the strength switch that we're talking about. I didn't actually show you guys this as well. That's why I like to pull this up, because I do miss things. So if you actually look at this Kraken correlation in this gap, so you guys see this gap here, you see the Kraken correlation between 10 a.m. and 1400 candle. If you go back here, let's kind of get rid of this real quick. A lot of things going on here. Let's try to keep it clean. You can see, there you go, right? There's a Kraken correlation there. Here's your 2-stage Kraken correlation between consecutive candles. Yeah, that's a 2-stage Kraken correlation, as you can see. And yeah, pretty sweet. There's our CSD, right at 1800. It's because we're opening the day near the refined invalidation level. So when you open up the day near the refined invalidation level, you get SMT, you get the reversal signature, close proximity draws near Asia. Like, we can absolutely expand, especially on assets like GC and silver, right? And yeah, you guys can see I entered the gap, and we held that John for a very, very, very nice trade. You guys can see. So yeah, you guys can do this too. Here's the equal highs. I've also put this framework out for you guys in my last recap. It looks something like this, where price reverses at a key level, it expands away, right? That expansion away is going to create gaps, right? And it's confirming this reversal because that's what price does after reversals. And it's going to retrace before hitting the overall objective. Doesn't matter if there's SMT here or not. It does not matter. And this is going to create failure swings on the retracements, okay? And we already know, remember, we know how to filter SMT. We know that the SMT is likely fake, right? Because of what all assets did. They're all reversing. So we know this SMT is fake. And this gap here, this gap becomes very, very high probable, especially when you get an SMT sequence in that gap. So this little internal to external price move is very high probable with this engineered failure swings, right? That is a retracement signature when price does that. But you can also use this logic with relevant swings, and that's what we're doing here essentially. So when price leads failure swings like this, and you have these relevant swings like this, relevant swing, which again is just spaced out highs and lows. I'll make a video on that. It's very, very important. When you get price trading to a relevant swing, this is where we ideally reverse to go and trade into this, our draw liquidity basically. Does that kind of make sense? So this would just be order pairing ranges or manipulation ranges, right? Manipulation of the range low to get to the high. It's simply just a key level to cap off the retracement. We know this is likely retracement because it's creating equal highs. So either that's internal or a low. Those are the only key levels that we use in the market is highs and lows and gaps. We simplify things, and that's what we do. That's what we did here. Really, I would say this is more of using relevant swings. Here's a relevant swing, the space between these lows, and that's what we did. In my last video, I talked about how we do with gaps, and you're gonna see my YM trade is the same thing, man. I mean, fuck, it's crazy. So another thing here, guys, you guys fucking ran this up too. You guys really want to see this, huh? So I said my specialty is intraday profiling. I think I'm one of the best intraday profiling traders. I guess in the ITCs. I don't even consider myself too much of an ICT trader, but whatever you want to call it, I think I'm very good at profiling, and I know how to trade all sessions, and I know the things that are required to trade each one. You can't just trade every session each day. It requires your specific framework, and I can release a YouTube video on that. I don't think that's too hard to make as far as the slides go. So we're definitely going to do that for this year. I want to get out a lot of videos this year. Hopefully I can get on a little schedule, but here we are. We're going to move on to RTY. So I actually did wake up late. That's why I woke up late. Still right on schedule. Kind of cringe, but you know, got to do it. But yeah, so I actually did wake up late, but I still managed to catch RTY because it's still valid to take. So let's go ahead and look at that now. RTY here. So let's look at the daily framework, just like we did on Silvery. So if you look here, the previous day, what did it do? So let's go. Let's first look at the triad here. Let's first look at the triad here on NQ and ES. So we're gonna go ahead and split the screens here. All right, what did Friday do? Friday. What did it do? It traded into a low, opposing lows, right? So basically, this asset was, you know, below some range lows. This asset was above those lows, creating a divergence in a gap. This is advanced premium discount, where the failure swing is like creating these spaced out lows. You see how basically the failure swing is creating a relevant swing? You guys see that? Like that is basically what creates high probable SMTs essentially. And I'll cover a video on advanced premium discount, asset sync, all that. It's just a lot of slides, dude. Like I need some time to do that. And you guys know, hey, Figma. But what is this, guys? This is a strength switch, right? You have this asset being weaker because it's below a low. This asset is stronger because it's above the low. And now you're seeing a strength switch PSP that I put out in my video. This is a concept I released a while ago. And it's a very, like strength switching in general, very high probable. This is how you confirm divergences. So we have a two-stage cracking correlation on the daily. This is why you could have traded Monday higher. It's really hard to get in though, to be honest, on this Monday. But it's important what Monday did, all right? So that's what I wanted to go over here. So I'm almost using like YM's logic to go higher to trade RTY in a way. Because obviously if YM goes higher, for example, then RTY would go higher because they're correlated. I don't use RTY and like NQ, SMT, or ES. I only view RTY with YM really. And the way I'll typically trade it, guys, is I'll look at the main triad mainly. So NQ, ES, YM. And let's say, for example, YM is like the strongest, and I'm bullish, okay? So I want to trade YM, but when I look at RTY, let's say RTY is stronger than YM, then that's when I'll really trade RTY. That's typically what I'll do. Or maybe, like I said, YM is strongest, I'm bullish, I can trade RTY as a lagging asset if it's looking stronger than NQ, ES. Like, that's how I typically trade it. But you can still look at it just between, YM and RTY. So now let's go ahead and pull up RTY right here for you. And let's look at this, right? So let's minimize this here. So you're gonna see this SMT breaks. So at one point, this was SMT. You guys know when SMT breaks, price can reverse. Maybe you don't know that. That's another thing that I came to a conclusion with studying the market. And I put out on my Twitter a while ago, no YouTube video on it. But yeah. So here, Friday reversed essentially. So Monday expands. And what did Monday do? It expands into opposing highs, again, creating SMT. But again, we don't care about this SMT. We don't care about it. Why do we not care about it? Because all assets are reversing at the lows. All assets are reversing at the lows. So again, they're typically, more times than not, the SMT is going to break. So we can actually trade RTY as a lagging asset to get to the same high that YM already hits. Does that make sense? So we're going to do the same thing on repeat. What do? Market equilibrium on the pre-stage range. If you're going to use a gap for your refined key level, in this area, we want to see price create its wick in the upper half of this level. We're going to use the 4-hour time frame to use gaps, like most times, because if I go to the hourly gap, 30-minute gaps, there's gonna be too many of them. We just want to see one solid gap majority of the time. Okay, that's how we also filter out gaps and stuff like that and key levels. It's a mechanical process from the top down, right? So when you go to the 4-hour time frame, do you have a gap? Clearly, right? We're opening basically very close to it. So let's play price here. So you're seeing that originally we created an SMT fill. No, we didn't, sorry. Yeah, no, we didn't. No SMT fill there. But you're seeing that here, YM is trading into this gap at 10 a.m. here. So what would this be, guys? A strength switch, right? You're seeing that RTY is picking up strength. It's picking the bullish SMT over YM. So this would be a strength switch SMT to become correlated to YM essentially, right? Yeah, look 1800 also just mainly opens low. So Asia doesn't do anything. The real open low happens at 2 a.m. So here it is, right? And then play the next candle, which is the 6 o'clock candle. And here you're gonna strength switch. So a 2-stage SMT at the low of day. Remember, it's super simple, guys. What am I doing here? So you're either gonna have, we want to confirm, key levels with 2-stage SMT, or sorry, reversals with 2-stage SMT. So obviously you're gonna form a reversal from a key level. So you're either gonna have key level SMT as your stage 1 crack, and then the second stage can happen like this. So it's within consecutive candles like this, or with a PSP. That's another 2-stage crack and correlation. It's as simple as that, dude. Yeah. Or if you don't have PSP, if you don't have SMT with the key level, you're going to use like a 2-stage PSP, or maybe consecutive candle SMT. Like, for example, we hit a fair value gap here, and you have a crack and correlation via candle 1 and candle 2, and a crack and correlation via candle 2 and candle 3. Right? So it's all the same thing. They're all 2-stage crack and correlations. Just require one of them, right? One of the variants. That's it. It's super simple, dude. I had some of my comments saying this shit is confusing. All right, dude. Then go learn something else. You're not gonna learn anything better than this. I can promise you that. I don't try to mean cocky. It's just true, bro. There's nothing better than this. I promise you that. So look here. The low of day, printed from a C2 candle. That's GxT, right? So the low of day is printed from a C2 candle. Like I said, I woke up late, so I come to charts around 9:55, New York time, which is 8:55 my time. And this is what I see. So obviously an SMT here, and then a C2 candle confirming the SMT, not a PSP, doesn't have to be a PSP because we already have the two-stage crack. And we also have driver pairing, right? Go to my YouTube video on driver pairing. It's the same thing, right? It's gonna always be the same thing. So here we're pairing a reversal with a driver. 930 creates this reversal. So again, what I wanna see when you have a C2 candle confirming the reversal, or any C2 candle, any swing formation, any reversal, I want to see that V-shaped signature, guys. That V-shaped signature, expansion into low, expansion away. That's always going to be the sequence. I want to see a gap in the lower time frame, ideally, just like the universal sequence on all time frames. That's what we want to see, baby. Now, when we look here, that's exactly what we're doing here, right? How do we confirm this SMT? Well, not only the strength switch, not only the closures, like the candle close itself, the PSP, the two-stage crack calculation, but I want to see that expansion away, that gaps being created, right? Look at these gaps. These are the gaps we're going to create the low of days in. Look, back to back, low of day created from 4-hour gaps, right? So that's the alignment that we're looking for. That's that true alignment. And when I go 30-minute, if you know my model, go watch my model on the GxT model. What will this be, guys? What are we opening up 10 a.m. with right now? Or within? We're opening up 10 a.m. within a candle 3 on the 30 minutes or the hourly time frame. So that is the GxT aligned sequence because we're opening up within continuation, right? The previous candle already reversed, so we know that 10 a.m. to just open low, high, close. That's it. So that's what it does. Now, you're going to see my entry here. Here's the V-shape, guys, by the way. You're going to think this looks like ass. It kind of does, right? It does look not great. It's just waiting for 10 a.m. essentially, but you're going to see here. How do I know this is like still valid? So the initial reversal is nice, right? Expansion, expansion, we create a gap. So notice how we can't close through these gaps, through this gap. We're respecting it with no body closes. We could still close through. That's not a big deal, but it's mainly this bulky opposing candle. Look how we're rejecting this area. None of the bodies are even coming close to closing through the 0.5, and that is a bullish signature. So to me, this is a valid positional entry. I can make videos on positional entry. I think it's very important to know when you can take them. Everything here is, the box is all checked, guys. Like the day opens low first, S2-stage SMT to low of day, 930 pairing, V-shaped signature. Like, dude, you don't need to wait. I really don't think you need to wait for much else in this. And this is literally when I told myself I was either going to enter from this at 10 a.m. because I know that 10 a.m. should just basically, you see that we're in a CST right now? This little range from order block low to order block high, to swing point low. Like this little range is what it should like continue from. If I mark out EQ, sorry, we'll actually use the indicator again. Whoops. Use the indicator again. Where the heck is it? Here it is. Here's the indicator. Mark out EQ of the wick. Like I know it should continue from the upper half of this wick, right? So I just put my entry here. I was like, okay, if I get this fill, that's great. If I don't get the fill, then I'll simply just enter from a CSD or continuation CSD, right? That would confirm the wick, like the 5-minute or something, right? That's it. But I did get the fill, so great. That's amazing, right? Which is ideal. I want to get filled as low as possible. That's always how you want it. You want your stop loss to be as close to the invalidation low as possible, not like way up here. When you get way up here, that's when you apply the GxT universal sequence, waiting for new aligned swings. And I took it to here, 2.7R. I actually recorded this. I think it's right here. I actually recorded this. Sometimes I record lectures for the lens. Not lectures, my trades and stuff like that. I actually recorded that, but yeah. This is where I took it, boom. Got there very, very quickly. And I should have, honestly, guys, held it to here, to be honest with you. I should have, like, held a runner, at least, like, one contract or something. That would have been nice, but I didn't, so that's the overall drawn liquidity. Kind of a mistake on my part, but I kind of just woke up. But I wasn't too greedy because I had a nice trade in Asia. I'm not mad about it at all. I'm not really mad ever about not holding trades. Like, you're kind of salty a little bit, but at the same time, dude, can't be too mad about it. Like, you can never be mad about taking profits. I got another opportunity anyways, right? You're gonna see the opportunity here, and this is my last trade of the day. And again, it's the same logic on how we filter our SMTs. How do we know which SMTs are fake? So here, check this out. This previous 1 hour candle, right? What did it do? Creating SMT with the previous day's high. If you look here. But why do we not care about this SMT? It's because at 9:30, what are all assets doing right now? They're all expanding. And what are they doing? Leaving equal highs. Like, look at these equal highs. Not equal highs, but like, you know, relatively equal, like failure swings. But especially over here, man, look at these. We haven't reached the overall objective. So any opposing SMT, even any opposing two-stage SMT, is a higher time for retracement. If it's opposing your draw on liquidity, it's a retracement. You gotta think about it like that. This is opposing not only the draw on liquidity, but the daily profile as well. So it's very, very low probability. Right? Look at NQ, dude. Like, look at this shit. This is a retracement signature when price does this. You have to understand that. When price puts this little, you know, whatever reversal this is, you got to understand it's likely a retracement. Where do we cap off retracements? From a key level and SMT. So when we create this gap here, it's exactly where we want to continue from, essentially, right? Duh. There's only an area to continue from. It's the hourly gap, right? And it's a PSP, right? Bearish candle, bullish candle. So what do we have now? Now we really have equal highs. Look at this shit. Now we really have equal highs on YM. And this is a PSP. Here. Okay, so what would this be? This would be an SMT fill, but it's also a two-stage cracking correlation because you have an SMT between the PSP, right? Which I have, no, I don't, I deleted it. I thought I had a diagram here. It's actually on my X. It's exactly this right here. This shit right here, dude. It's literally this. Like, literally this. We have the low of day being formed, price expands away, creates a gap. The candle that creates the gap is a PSP, you get an SMT fill. And it's a strength switch, even fucking better, dude. So now you have a strength switch to confirm asset synchronization. Go to the 5 minute. Boom. I mean, fuck, dude, is that hard? Not really. It's really not that hard, not that difficult when it's laid out to you like this. It's not that hard when it's laid out to you like this. Now, my fill was a little bit lower. It was very decent, so it was somewhere up in here. It's because I had to get 2R to the high. At least I wanted to. Yeah, exactly. I wanted 2R to the high. So I only got 2R to this, but it's fine. That's all you need. So boom. Not hard at all, right, guys? And that's cracking correlation, guys. So let's go ahead and look at YM here. Remember, we had an SMT here, right? But really, we have a CSD confirming low of day. So candle 2, candle 3 forms a CSD. Now we're trading candle 4. The low of candle 4, which is basically the low of 10 a.m., is actually created from a cracking correlation. You have to think about it like that. Right, so it's very high probable. We're trading 10 a.m. power of 3 here. That's really all we trade is open, high, low, close, power of 3, whatever you call it. And we do it better than anyone. This is the best power of 3 model in the world. It is the most consistent model you will ever see. Like, deadass. Like, how is it that people... I could repost shit for, like, days, dude. Like, how is it that people can literally take the same trade, like, across... Like, they don't even need signals, dude. Like, it's crazy. Yeah, it's insane. But anyways, guys, that's pretty much wraps it up today. Pretty quick one, honestly. I feel like I really went to that very quickly. Yeah, let's see how a shorter video does. Hopefully you guys enjoyed. It's really all I have for you guys today, I think. This is also really clean too, man. We're not getting into that. Just you guys can go study this right now. 6 hour. What is this? Bearish candle. Bullish candle. 2-stage cracking correlation. Right? So again, you don't need a 1 hour PSP, nothing like that. But you get it anyways. And you will get it mostly. While this asset, he's taking out this high. What do we get? In the gap. Where's the fair swing being printed? In premium, or sorry, in a discount, which is even better. So 12 o'clock, PSP, boom. Go into the 30-minute time frame actually, or was the 15-minute? Yeah, 15-minute. Notice how Inky was the strongest. Way up in premium up here. What do we have? Some gaps up in here, especially on ES. ES bullish candle in gaps, bearish candle, strength trades PSP. What do you got here? To trade continuation, a gap. Wait, what time is that? Sorry. This is 14:30. 14:30. Boom. Trades to the previous candle's high. SMT fill. Right, or maybe it's on the 30-minute. I can't tell. Maybe there was nothing there. I can't tell. I think there's actually something right here. My bad. It's actually earlier. So here, guys, you're seeing this asset is below a low, creating a gap. So for 13:30. 13:30. Boom. There's your strength switch right there. Actually, boom. That's what it was. Right. So I mean, there's fucking opportunities everywhere. There's opportunity here, opportunity to catch up. I mean, it's pretty great. So I didn't unfortunately get to. I didn't trade any of that, unfortunately, but it's super clean. I know a lot of you guys did. You guys tag me every day, and I see all of them, dude. I'm super proud of you guys. You guys can do this, absolutely do this, just like me. It's absolutely achievable. Just keep backtesting and whatnot, and keep practicing every day, and you will absolutely get there. Like, man, look how clean that is. Wow, that's insane. Anyways, guys, I'm gonna catch you guys later. Let me know if you guys enjoyed these. Let me know what you want to see, what YouTube videos you guys want to see. I plan to do a lot of YouTube videos. I want to double the YouTube videos that I put out last year. You know, last year wasn't like too consistent, right? I post a video every month or two. I want to start to post maybe a couple months. You know, some of them will be recaps like this, but I think these are very beneficial. So let me know what you guys think. Leave a comment, leave a like, use code GxT at most prop firms, and I'll catch you guys later.